All right, hey everybody. John Thorman here, your financial success coach. Welcome to our live stream. This is something new for me, and I'm excited to do this with you. Today's topic, what I wanted to spend a little bit of time with you on, is our broken retirement dreams, and specifically what we can do to fix them with our retirement crisis survival guide. So I've got eight survival tips that I want to go through with you today and talk about how you can survive this retirement crisis, which is a big issue in America. And you're probably feeling that yourself already, looking at your 401k statement and loss of retirement income benefits. So let's tackle these 8 topics. But first, I just want to say this, that, we believe that personal financial planning needs to be personal again, and that one size fits all financial advice fits nobody at all. So we are not into that. And when we do financial coaching, when we do financial planning with individuals and couples, we're taking a very personalized approach and looking at what's going to work for you based on the game you're playing and where you're at in the game and how well you're doing in that game. Okay. It's got to be personal. So we're all about making personal finance personal again, because we want you to win your money game and create generational wealth to transform your family. So like I alluded to, we work with creating a financial game plan for our folks, for our clients, our coaching clients. And the financial game plan works like a football game in some respects, because I break it down into 4 quarters. Your first quarter is the accumulation phase. That's where you are saving and investing and accumulating assets for your future to replace your working income. Then the second phase is what we call the asset protection stage. And this also coincides with the retirement red zone. This is a danger zone because it typically will be 5 to 10 years before retirement and 5 to 10 years after retirement. And in that retirement red zone, you really can't afford to lose a lot of money in your equity market portfolio or bond market portfolio, because you're running out of time and you can't catch up. And that's where we talk about sequence of return risk and how it will destroy your retirement portfolio, and you'll wind up out of money years earlier than you otherwise would. So the protection phase is very important, and most people don't talk about it. They jump right to the third quarter that I talk about, which is asset decumulation. And it's really important that we understand that asset decumulation is completely different from asset accumulation. And sadly, many people are not getting the right kind of advice so that they can set up their decumulation strategies and generate enough income so that they can have peace of mind and guarantees and security so they can enjoy their retirement years and not be worried about running out of money early. And then finally, the fourth quarter, that's what we talk about asset transfer, and that's your legacy, right? That's passing on your assets to your children and your children's children, and doing that as tax efficiently as possible. And so there's special strategies there to help you do that. But I want you to think about your own financial game plan right now and where you are at. And are you winning or losing? Are you ahead or behind? Are you in the accumulation stage, or are you in the protection stage, or are you decumulation already? You're going to be in one of those primary 3 quarters, most likely, if you're watching this video today. Now, the plays that you're going to call will depend again on your age and where you're at, what your goals are, and if you're ahead or behind. Okay. So with that said, what I want to do is run through these 8 financial plays, these 8 calls that you can make to transform your financial life and fix your broken or damaged retirement dreams and get back on track. But first, I need you to be willing to be wrong, right? Be willing to be wrong. Be willing to have your preconceived ideas and beliefs about retirement income challenged, and consider some alternatives that maybe you have disregarded in the past because you didn't have the right education. You were given people's opinions and myths, and you didn't get the real facts. So let's approach this with an open mind and be willing to learn something new and consider another opportunity, okay? So let's run through these 8 financial plays that you can call to survive this retirement crisis and actually thrive and enjoy your retirement years, okay? So number 1 I want to talk about is pensionize a portion of your nest egg, okay? Maybe you've not heard that term before, but you can pensionize a portion of your nest egg. And economists say that you can do this and it will produce the same amount of income as your Wall Street, portfolio with the 4% rule, but it does it using 40 to 50% fewer assets. So you don't have to tie up all your money in an investment portfolio and pull out 4% a year to make it through retirement. You can look at pensionizing a portion of that nest egg and do it for about half of the assets. And that'll guarantee you a monthly income stream for the rest of your life and or your spouse's life as well. Just like a regular pension works, just like Social Security pension works, you can have a DIY pension, your own personal pension, and take care of that monthly guaranteed income for your lifetime. Now, this is a huge, huge advantage, and it leaves you all kinds of other assets available, right, that you can invest a little bit more aggressively without fear or risk of loss, okay? So I want to encourage you to explore this option of pensionizing a portion of your nest egg. Now, what's exciting is everybody qualifies, okay? And you can set this up years ahead of time. You could set this up to 10 years ahead of time, and every year that you delay turning on that income stream, you defer receiving that cash flow every month. Every year you defer that, your monthly benefit amount increases. It works similarly to Social Security, right? If you reach your full retirement age at age 67, then you elect to start receiving Social Security, you get 100% of your benefit. But if you defer, every year you defer taking that until age 70, you'll get about an 8% bump, an 8% increase in your retirement income check. Your pensionized portion of your nest egg, your DIY pension, will do the same thing. Every year, for up to 10 years, you can get that 8 or 9 or 10% bump, an increase in your monthly benefit by waiting, if you set this up properly and have enough lead time ahead of you. But regardless, you can set that up and use fewer assets to get the same cash flow, same monthly income. So very flexible. Now, what's interesting also is that economists generally don't agree on much, right? Everybody's got a different opinion, and it depends on a bazillion different factors. But what's interesting about this is, as Moshe Milevsky says, economists are virtually unanimous about the benefits of this pensionizing a portion of your nest egg to max out your retirement income strategy. So don't leave this out, okay? Don't neglect this. Don't discount this. I want you to look into this, and I'm here to help you. I can show you what this looks like and explain it to you so you can take advantage of it, okay? Now, next, if there's any questions about that, you're free to pop them in our chat, and I can answer those as I go. I'll try to bounce back and forth here. But next, number 2, again, open mind, right? Number 2 is harvest part of your home equity and put it to work for you. So right now, I guess there's about $13 trillion in tappable home equity amongst seniors 62 and older. That's a bulk of their net worth as well, okay? Most people, most seniors, the bulk of their net worth, their assets, is in their home equity. But what's happening is they're not doing anything with it. They're not tapping it and taking advantage of that leverage to provide a supplemental income stream to enjoy their retirement. Now, I think a lot of people have some preconceived ideas, and I know that I personally was skeptical about this just because of the horror stories I heard, and really because I never dug into it. I never got educated. I never learned about it myself. So my views have changed drastically. I learned about the modern day reverse mortgage, which is called a home equity conversion mortgage. And what I learned is that this is a really powerful strategic planning tool for retirement income. Okay. Now, this is specifically designed, this modern reverse mortgage, specifically designed for seniors age 62 and older. And it's very flexible and it gives you some really powerful features. And there's 3 points that I really want to bring up here that you probably don't know about. Okay. And the first one is the most impactful, the most dramatic, is that you can set up this home equity conversion mortgage as a line of credit, but it's not like any other line of credit that you're familiar with because it's a growing line of credit. That's right. Every year, whether you use it or not, I mean, and ideally, the best way to use this tool is to set it up as early as possible. So when you first qualify, age 62, go and set up the home equity conversion mortgage line of credit and then don't use it. But every year that you don't use it, of course, you have no interest charges and no PMI, no insurance charges. But what happens is the available credit limit grows, and it grows every year at a predetermined rate, somewhere between 6 to 8%. And so every year that's compounding to your advantage so that later in retirement, say 15 or 20 years down the road, when you are maybe considering issues for long-term care insurance, or your assets have run out prematurely, or when the market crashes and you don't want to sell your stock anymore, you've got another asset, another access to cash that you can use. So this important point number one is, with this new modern reverse mortgage, it's a growing line of credit that's going to work to your advantage and can double and triple the amount that you can borrow later in life. Number two, and of course, the big benefit of this is you can use it as a volatility shield. Like I referenced earlier, when the stock market crashes and we have this sequence of return risk, you can use this line of credit to replace your investment portfolio. Meaning, when the market crashes, don't pull any more money out of your investment portfolio. Instead, pull money from your growing line of credit and use that to live on. And when you do that, that's acting as your volatility shield, and it gives your investment market-based portfolio time to recover, right? You don't want to sell when the price has dropped by 50% because you have to sell way too many shares, and that will devour, it will ravage your retirement portfolio. Number two, with these home equity conversion mortgage, you can use it as a purchase option. So if you're looking to downsize and move to a less expensive state, city, smaller home, and you want to access some of the equity in your home as cash, you can use a home equity conversion mortgage for purchase, and it'll let you get into that home with the least amount of cash up front, and then you've got your rest of your equity that you can put in cash and invest it however you want. And then, of course, this line of credit is going to start growing for you again. But number three, and of course, the big benefit with this reverse mortgage is that you don't have to make any more mortgage payments. Okay. If you have a mortgage payment right now, if there's a mortgage balance on your current home and you want to age in place, you want to stay there and live throughout your retirement there, there's a great opportunity. You could put in this conversion mortgage and it'll pay off the balance that you owe. And now you don't owe any monthly mortgage payment. So imagine saving $1,500 or $2,000 a month on that mortgage payment. That reduces the amount of money that you must pull from your retirement account, and saves you taxes as well. So the home equity conversion mortgage is tax-free money that's available to you. And that is a really huge deal. But for the right person, oh my gosh, this is just gonna change your life, because you can stay in the home and you don't have to make any more mortgage payments. And as long as you just keep the house in good repair and pay your taxes and homeowners insurance, you can stay there until the last spouse dies or moves away permanently. And what happens is when the home is sold, any equities that's remaining in that property is yours or your heirs. You get to take that and go on your merry way. And you're protected with the insurance, because this is an FHA insured mortgage. You're protected from that mortgage so that you will never owe any more money than what that house is worth. Okay. So you're covered and protected, and that's a huge advantage there. All right, number 3. Again, open mind, okay? Work with me. Use a portion of your nest egg to trade options. Options can be used to generate ongoing, consistent monthly cash flow from your underlying investment portfolio, okay? And it will increase your total annual returns. You don't have to settle for leaving your money in an index fund and waiting for that index fund to go up to make a return. You don't have to wait for that because you're missing out on all the other times when the market's sideways and down. When you utilize options, you can sell those calls and puts and get premium, collect cash flow every time you do that, and keep those underlying investments. And you will see a dramatic increase in the total return from your portfolio, but also in the cash that you can generate. So you can do this DIY, do it on your own, learn, take some courses, and learn how to trade options to make more money from your underlying investment portfolio. It's not this risky, dangerous thing that your broker or your investment salesperson is going to tell you. They just don't know how to do it themselves, probably, and they don't want you trading and investing your own money because then you'll take the money away from them. But this is a powerful feature, powerful option that you can use. As I said, learn how to do it on your own, or there are actually specially designed ETFs, exchange traded funds that are built around having this option trading strategy. That they're designed for trading options, and you can just buy that ETF and then let those professional money managers handle that for you. The fees are totally reasonable, but you could see monthly returns of 2 to 3%. I mean, imagine what that could be like over the course of a year. That's 24 to 36% return on your investment versus, the 8 or 7 or 9 that you're maybe going to earn in an index fund over a long period of time. So this could be a dramatic increase to your retirement income and fix your retirement dream. Okay. So make sure you're making your money work as hard as possible for you, regardless of the market, up, sideways, or down, by using options strategy. All right. Any comments on that? We'll take a look here in the chat. Nope, no chat yet. Okay. And if you're not watching this live, if you're watching a recorded version of this, be sure to leave a comment down below or a question, and we'll make sure to address that with you. Okay. But again, get a personalized financial game plan put together. Reach out to us. We can schedule a complimentary 30-minute discovery call and see if we're a good fit to work together, if I can be a good coach for you and your particular situation, and if you'll be a good player on the team. Okay. But let's find out if we're a good fit to work together and create this personalized financial game plan for your retirement so you can win your money game and create this generational wealth. Now, number 4, I wanted to present here today is consider opening your mind to different asset classes. Wall Street notoriously just talks about stocks, bonds, and cash, and maybe a REIT, maybe a real estate investment trust. But that's because that's where their focus is. We can thank, what's his name? Harry Markowitz, who came up with the modern portfolio theory in 1952. But guys, that wasn't designed for individuals. That was designed for Wall Street to build portfolios with products that they could sell. And that was before options, and that was before any other kind of personal financial asset that Wall Street isn't able to sell. So we got to expand our mind. You have assets available to you that Wall Street's not telling you about. And what those are, consider what's happening with Bitcoin and cryptocurrency. This is an enormous, massive technological revolution that is happening right now in our economy and in our world. And if you're not learning about it and understanding it, you're missing a huge trend, a huge shift. And some of these, Bitcoin has been averaging over 60% a year annual returns over the last 4 or 5 years. Unbelievable. It has been consistently either the number 1 asset class or the worst asset class. But 3 out of 4 times, 3 years out of 4, it's the number 1 best performing asset class and you're not even aware of it. You're not taking advantage of this. And the projections of the performance of this asset class over the next, decade or two are enormous. And it could be a complete total game changer if you have a little bit of money that you could put away into a different asset class like this and let it ride, or you could trade it. You could do either option, whatever is best for you. Long term, just let it ride, or you can trade it and make more money by trading. But look at this asset class, okay? Also, the derivatives that I mentioned before includes options and maybe futures contracts, but you can look at expanding into new asset classes there. But I've got two excellent bond alternatives that Wall Street doesn't talk to you about. Bonds are more correlated to equities than we'd like to think, and they're volatile. And we saw that firsthand, up close and personal, just a couple of years ago. 2022 was a bad year. Both bonds and equities were down about 20%, right? So we've got to find something better that's non-correlated with equities, or we're not going to lose money. And I have two excellent bond alternatives for you to consider. Number one, cash value life insurance. Now, whatever your preconceived notion or idea of that is, you need to just tuck that away for a second. Be curious, not judgmental, as Coach Lasso would say, right? Be curious. There's been a lot of innovation in the life insurance industry over the last 40 years and the last 20 years, and their products are better and more advantageous to help you plan for retirement. Because here's what's happening. We're living longer than ever, right? We're living longer, which costs way more money to fund, and we have way more healthcare expenses. Healthcare costs are going through the roof. And this cash value life insurance products that have living benefits can replace the need for long-term care insurance and can provide supplemental tax-free income for you to live on if you design these products correctly. And there's a huge advantage. So it's not a comparison to equities, it's a bond alternative, okay? You're going to outperform the bond returns, you're going to have less volatility and less financial risk by using cash value life insurance in an intelligent and proper way. And I can help you with that as well. So be curious and find out what your options are, what's available. You won't know if you don't ask, right? The second excellent bond alternative that we can help you out with are annuities. That's right. And not annuities that your grandfather used, and not, the traditional option here. There's newer, modern annuities that serve specific purposes, but allow you to put away money and tax defer all of that, so you don't keep paying high taxes every year on all your investment gains, but have consistent, predictable returns. And you can look at those as alternatives for bonds. So expand your horizons and look to some other asset classes that you maybe haven't considered in the past. All right, number 5, buy, borrow, die strategy. Have you heard of that before? The strategy where you buy, borrow, and die. This is what wealthy people are doing with some of their assets, okay? And it allows them to not pay any taxes. And of course, taxes are the number one theft of your wealth, right? And we want to minimize our tax burden as much as possible. So what you can do is take assets that are appreciating in value, especially if they appreciate rapidly in value. You don't want to sell those ever, especially if they're scarce. If they're scarce and valuable, you don't want to give that up. It's like having the golden goose, right? The golden goose lays a golden nest egg for you every day. So you don't want to get rid of the goose, right? You just want to keep harvesting those eggs. Well, in a similar fashion, if you've got a scarce, valuable resource, you never want to sell that off, because when you do, you create taxable gain. You have a tax liability now that you got to pay capital gains tax on, and then you just get what cash is left over, but now you don't have that asset anymore. So it can't continue to provide cash flow, or it can't continue to appreciate in value. You're out of luck. That's a bad situation. You don't want to do that. We want to take our paychecks and convert those into assets that can compound over time, okay? So with the buy, borrow, die strategy, what you do is you take that appreciating asset and use it as collateral for a loan with very favorable interest rates. The interest charges are going to be less than the rate of growth on that appreciating asset. You keep ownership and control of that asset, and you don't have to pay any tax. It's not income. So there's no income tax due on the money that you borrow against a collateralized asset. So you can do that with all kinds of assets. And most wealthy people are doing that with real estate. They're able to do that with, but they're also doing that with their stock of their companies. They own company stock and they borrow against the stock. Tax-free income for them. You can also do that though with cryptocurrencies, and you can also do that with gold and silver. And of course, you can do that with your cash value life insurance. And the cash value life insurance, the asset, you just get a collateralized loan. It's instant, like it's very fast, and you can get guaranteed 0% charges. So you can have a positive arbitrage. You can set this up where maybe you pay 3 or 4% interest, but you can earn 6 or 7% return inside the cash value policy. So that's even better. But with the right kind of contract, you can have a guaranteed 0, or you can go out and get positive arbitrage. So that collateralized loan option in your cash value life insurance policy can be a huge advantage for you also. All right, that was number 5, buy, borrow, and die. Is there any comments or questions about that? Okay. Again, after this live stream, if you're watching the recording, you can comment. We'd love to hear your comments down below. Number 6, consider selling. Now be careful with this. Consider selling an unwanted life insurance policy that you might have, even a term policy. These are called life settlement agreements. And what that is when you, as the owner of that policy, sell it to a third party, and in exchange, you receive a one-time lump sum cash payment. Okay. That can be way more advantageous to you than cashing out that policy or just canceling it and forfeiting the cash values that are in there. There are people that will buy your ownership interest in that insurance contract and pay you money for it. Okay. That's their investment. So you want to consider doing that if you've got some older policies and you're thinking, it's extra, or you just don't need it anymore, you don't want it anymore. Look at these life settlement options. Number 7, I mentioned this, but let's expand our horizon and be thinking about nest egg versus the golden goose. Which is easier for you, you think? Would it be easier for you in the next, 10 years maybe to save and invest and build up a investment portfolio worth $2.5 million so that you can retire with about $100,000 a year income? Or would it be easier for you to buy or build, or a combination, a asset that can pay you $2,000 a week every week for the rest of your life? If you take your creativity and your knowledge and your skills and your passion, you could build or create or buy some asset and grow that asset so that it starts paying you $2,000 a week. And you can do that, in my humble opinion, much easier and much faster than you could ever save and invest $2.5 million. Except if you get lucky with some cryptocurrency maybe, and you got a good lump sum to start out with. But most times, most option with less risk, think about, do you want to focus on scrimp and save and invest and take a long time to accumulate this big nest egg of 2.5 million? Or do you want to see what could you do to build an asset that could pay you $2,000 a week? I think you can find a lot of options that will help you do that in a lot shorter time frame. But then that's your asset that you can own forever and will it to your children. Okay. And of course, remember, assets that you own, like the crypto or the gold or the business or all these other assets, if they're in an unqualified account, like a brokerage account, when you pass away, your family inherits that with the step up tax provision. So if you've got an investment property with $1 million of capital gain potential, if you sell it, you have to pay capital gains on it. But if you will that to your children or your children's children, now the basis, it goes up to the market value at the time of your death, and your heirs could sell that at current market value and not owe any taxes at all. So again, thinking long-term here with creating generational wealth, you want to take advantage of that as much as possible, which is another reason why the buy, borrow, die strategy works so great. Finally, I just want to talk about a less appealing option, but still one that a lot of you would want to consider. And that's figuring out how you can monetize some of the assets that you already own, but you're not using to create cash flow with. So example, maybe you have an RV and it just sits in the storage lot, 11 months out of the year because you only use it 12 or 1 month a year. Well, the other 11 months of the year, you could turn around and rent that thing out and have it start producing cash flow for you. Or what about if you've got a big 2-car garage or 3 or 4 or 5-car garage and you're only using one of those spots? Well, man, you could turn around and rent out the empty garage spots as a storage option for other people. There's a market for that. You can turn that asset into cash flow. So you could rent out your car or your motorcycle or any other vehicle asset you could rent out. You could rent out your backyard or your pool area for birthday parties or other kinds of events. And of course, you could rent yourself out so that you could go do childcare, elder care, run errands, do shopping, be a personal assistant to some busy families or to some elderly people that can't get out as much. But you've got options. You're the asset at that point, or something that you own is the asset. Turn around and find ways to monetize it to create some extra cash flow. Okay. So those are my 8 tips, my 8 ideas so that we can avoid this retirement crisis. This is my survival guide, and I'd love to get your options on it. And did I miss your favorite income strategy that you're planning to use to survive the retirement crisis? If I missed one, man, I want to know about it. Okay. So be sure and let me know in the comment section down below. All right. But I hope you got a lot out of this. Be sure and share this with others that you care about, and like this video and subscribe to the channel so that we can help you every week with improving your financial fitness. Okay. We want to help you achieve financial freedom faster so you can enjoy it longer. See you on the next video.